At an absolute minimum, I think what we're looking for here is a 1970s combined with a 2008 financial crisis. And you're right, there is absolutely no plan to get off this trajectory. If anything, both parties are united in spending even more. It's like they're good cop, bad cop, depending on what the, is it a war? Is it global warming, whatever it is? They're really allies at this point, partners against the people, increasing the spending.
Welcome to the Rose Show podcast, because the truth shall set you free. So I'm here today with the truth and freedom maximalist, Dr. Peter St Onge. He is a PhD in economics, an Austrian economist. He's an economist at the Heritage Foundation, a fellow at Mises Institute. He has amazing daily videos and excellent weekly articles on his Substack, former MBA professor, and an ex-bartender. So we're here at Economics Happy Hour. How you doing today, Dr. Peter St Onge? I love your name, by the way. Very cool.
I am great. Thank you. I inherited it. I didn't make it up, unfortunately, but yeah, thank you. And it's an honor to be here. I really appreciate it.
Thank you so much. I know you're a world traveler, speaking at all these amazing Bitcoin conferences. So how has that been? How are your travels, and how are you doing on the speaking circuit in Bitcoin?
It's been great. There is such a good crowd in Bitcoin. The community is so interested in how the world works. There's a lot of people who really are kind of big picture thinkers, a lot of interest in history, people who, I think once you start to understand how money works and how fiat works, people go back to the Roman Empire, to Song Dynasty China. People get really interested in history and in sort of understanding the mechanics of how the world works. So every time you go to a Bitcoin conference, whether it's the speakers, the attendees, people are really deeply informed. They're also really passionate. So it's been a blast. It's been, 3 conferences over the past month. Going to some amazing places, Japan, Amsterdam, Los Angeles, all interesting in different ways, but it's really been a blast.
Wonderful. Well, we're so grateful to have you here today, Peter. And like you said, passion. And that's the key. And your podcast, your articles reflect passion, and your passion of exposing the truth in economics, and not the mainstream economics and headlines that we see. But you didn't start out as an economist, and we're going to go a little further back and go back to your Thailand days. And you retired on a Thailand beach. Then the .bomb happened, and then you were a bartender. Tell us about your journey from there to where we are today as an Austrian economist and Bitcoiner.
Yeah, it's been a heck of a journey. So I went to school for economics, and I went to a prestigious program, which means that they didn't teach anything about real economics. It was just the sort of Keynesian mainstream mumbo jumbo. So I had never even heard of Austrian economics through an entire BA. And then after I graduated, I went into marketing. And my mom was, really disappointed. She was like, you have this beautiful economics degree, and here you are wasting your life in marketing. And but for me, it was fascinating because so both economics and marketing are kind of applied psychology, right? A big part of both of them is trying to understand why people make decisions. And in marketing, what struck me is that you've got all these models of human behavior, and they're really, really simplistic. Just like stupid simple, right? Like if you tell people something 7 times, they'll eventually buy, or just really dumb rules of thumb. But the thing is, they work. Okay. Always tell the customer what you want them to do next and make it easy. Frame your offer in terms of benefits and not cost. Okay, whatever. You've got all these different rules that are sort of cobbled together over decades by practitioners. And the bottom line is, they work. And then you look at economics, and economics is a whole different story, right? So economics has these beautiful models that are just, pages of calculus and the charts and the second derivative and all these beautiful math, and it's garbage, right? You can't predict for crap. You see Nobel Prizes awarded for things that like any 5-year-old knows, and their more sophisticated models just break at every turn. You know, they failed to predict the 2008 crisis. I mean, just they failed to predict the inflation not even 2 years ago. Just time after time, economics as a profession, mainstream economics has completely failed. So for me, it was fascinating, right? On the one hand, you've got this one model of human behavior that works, but it's really, really simple. It's kind of embarrassing. And then on the other hand, you've got this other just gorgeous edifice, you know, that they hand Nobel Prizes out for, but it's complete garbage. And so what for me kind of squared that circle was discovering Austrian economics, right? Because Austrian economics, it's a formal model. You know, you've actually got models of why people make choices. You got the action axiom, and, you know, you've got a couple of core principles in Austrian economics. But what they come out to is they actually predict behavior. So for me, that was like intoxicating. It was like finding the Holy Grail. So that was exciting. And so that's, while I was doing the marketing thing, I hit the jackpot with .coms. Back then, this is like the mid 1990s. It was a lot like crypto today, where, you know, you just plunked your money on anything and it went to the moon. So I retired on that for a couple of years. I was paying too much attention to it, and so I intentionally moved to this remote Thai island so that I would stop obsessing over the stock price every day. And it turned out to be really bad timing, because while I was there, like, it started completely collapsing. So I went in, motorboated in one day for smokes, checked in an internet cafe, saw that my main stock had dropped by like 80%. And I was like, ooh, this is awesome. It must have been a stock split. I wonder how much money I made. And turned out I didn't. So I had to go back and get an honest job. But I didn't lose everything. And part of the way through that, I thought, well, yeah, but now I've kind of got this reset because I've been goofing around for a couple of years. And so I could either go back into marketing, which I did initially. I went to work for a big toy company in Japan called Takara. They make the Transformers. So I was over there for a little while, and I thought, yeah, but, you know, I'd kind of caught the bug in the time that I'd taken off and sort of goofing around on beaches, reading all these books. I'd kind of caught the bug. And so I went back for the PhD, not really expecting to work much at that point. But anyway, I got the PhD, and then it was actually my wife's idea. She was like, maybe it'd be fun to teach. I didn't want to join a US school because they're all progressive. You know, they're sort of corrupted as a field, mainstream economics. So applied to Taiwan. There was a program over there that was Austrian friendly at a school called Fengjia in central Taiwan. So I went over there for about 5 years and taught MBA. And it was actually during that. So I was the only foreign professor in the business school. And that meant that I was kind of the bottom of the heap, right? Because, you know, I didn't have seniority. I was an outsider. So they would give me the 9 a.m. classes, like the classes that nobody wanted. And nobody wants those in an MBA because they're like, the students drink, right? So they don't show up on time. And so I thought, okay, so how am I going to get the students in the class? And I thought, okay, I'm going to do these little juicy, you know, snatched from the headlines. How do you apply strategic management? And so, you know, we're going to look at this case study. So I figured, all right, let me grab those from the news. I'll make them real snappy, put a little bit of detail in there that maybe they're going to tell their friends about, you know, basically make it so that they actually want to show up for class on time. So I would do that. And it was so much fun that, you know, I would like, those things would run on for like 20 minutes and I would forget to teach the textbook. And but anyway, I really enjoyed that. And then anyway, fast forward, came back to the States, felt like I was out of the game too long. I was seeing what was happening in America. So I wanted to come back and sort of take my place on the wall. So I joined Heritage. And then just about 6 months ago, I was talking with my wife and I was like, you know, I really miss doing those old videos. And she was like, well, do them. You don't need to university to do them. You can just post them on the internet. And so we did. And it's been shocking that even like regular people who are not hungover actually want to hear about these topics. So we've been doing them ever since.
Love it. I love your videos. And, you know, everything happens for a reason. And I think that you losing in that stock and dot bomb, there's a reason for that. We're so grateful to have you enlightening people on the reality and what's going on in the
Yeah.
world in economics. And, the funny thing you mentioned about economics is that there's just so many different opinions. And the one thing you can
Right.
guarantee is that the economists disagree. And there's just so much
Yeah.
disagreement, and they can look at the same data, but interpret it in so many different ways. And Peter, you have a way of simplifying complex topics, and we love that. And so I want to ask you, thank you for telling us about your background, but I want to ask you to please unveil the headlines and you tell us what's really going on in the economy in the US as well as global, right in front of the people.
Yeah, it depends on what level we zoom out. I think really where the story starts is that over really the past century, but especially the past couple of decades since the 1970s, governments of the world have been on this concerted push to take over our economic lives. They are constantly sort of winning territory away from the people. And, that's in many ways moving modern, the developed world anyway, into this almost Soviet outcome where, huge parts of our lives are now controlled by central planners. We know from the Soviet experience that central planning does not work. It just creates poverty. And unfortunately, we're going through that. So across the board, whether you're looking at Europe or Japan or the US, you've got nearly flat incomes for over a generation at this point. That was not normal. If I just take the US, for example, pretty much since the beginning of the Republic, since the 1600s, every generation in the US was basically twice as rich as their parents, right? So every generation would look at the kids and say, what potential you have today, if only. And that's broken really since the 1970s, where, you're seeing young people. They look at the world around them. They're like in their 30s. They've got roommates. They're eating ramen. Okay. And they compare that to the lifestyle they grew up in, right? A 4-bedroom house that the parents owned. And that lifestyle is just, that's like science fiction to them. And it reminded me in the 2000s, I used to travel to Argentina for business. And one day I had a taxi driver, and he had been a physics professor. Okay. And now he was driving a taxi because Argentina has, collapsed ever since the 50s. This was occurring about 30 years ago. But anyway, he was talking about his son, and he was saying how his son can barely read. And, that was striking for me because as an American, you're so used to the opposite. You're so used to people who, their parents were quasi-literate and then they've got, a college degree. And to actually see that in reverse for me was eye-opening. I guess I didn't realize that can go in reverse. Apparently it can. And unfortunately, I think in the US, in Europe, in Japan, really across the West, places like Canada, I think that we're seeing that happen right now, where people are essentially they're either treading water or they're actually going backwards. I think the cause for that is this government takeover. And I think the single most important element in that government takeover has been the money, right? It has been the printing press, the ability to use the central bank to print up unlimited amounts of deficit. The governments then use those deficits to take over hunks of the economy to grow themselves like a cancer. Unfortunately, once you start growing a government, if you pour $1 billion into a government, you're going to spawn a bunch of bureaucrats. And one of the things those bureaucrats are going to do is to make everybody's life difficult, to, crush the economy. But another thing that they're going to do is to try to increase their own power, right? So they're going to try, there's marketing. They're going to feed money out to interest groups that, they're going to expect to then turn around and do them the favor to increase their budget. Just a government, pretty much every dollar you put into government is like planting a seed that is going to grow into this little cancerous growth. And I think, unfortunately, between the 1930s, the 1960s to 70s were probably the two really big pushes. And, then, of course, the world wars. Through those processes, we've had this ratchet where, between the central bank and war spending itself, the government has just grown and grown to the point where today the government takes about 50% of everything we earn if we add up all the different levels of government. You have state, local, federal. And then in addition to that, they also print, something like 10, depending on the year, 10, 15% of money. They're essentially stealing from everybody else. You put it together and we're already about 2/3 of the way to the Soviet Union. And that, to me, if we see what the result of that is already, it's those generations going backwards, those kids being poorer than their parents. And if we don't stop it, I'm afraid that, we're going to start accelerating down that path and look like Argentina.
It's very scary, but we all need to be aware of that. We have massive inflation, and if you start compounding it, it's much higher than what they claim of that 3%. And then the monetary debasement, all the mass printing, Trueflation, I like that site, and they estimate since 2020 that inflation is like, I think, 23%. And then Safadine Amus, another great Austrian economist like you, mentions how inflation, he says, is about 7%-ish, and in the US. So regardless, we know that 2%, 3% is a fictional number, and they tend to give us misleading stories. So tell us about inflation and how the war is not over. And I know you've mentioned that there's a likely path to stagflation as well, with the low growth and the high rate hikes that we've had that's just over tightening our economy and compressing our businesses and entrepreneurship.
Yeah, that's exactly right. Inflation fundamentally comes from creating too much money. It's very simple. And there are two ways that money is created. One of them is the Fed literally goes out and buys some asset and magics up the money. Like, they type it on an Excel sheet and they say, okay, I'll give you this imaginary money for whatever, typically government bonds, and that magics the money into creation. That accounts for about 1/4 of the money printing. 3/4 of the money printing then comes from fractional reserve banks, who they're in theory required to hold a certain amount in reserve and then loan against it. Currently, they have zero reserve requirement, meaning that they can, strictly speaking, they can print unlimited amounts. They're only constrained by what they think, will be paid back to them. But anyway, you put those two together, and I mean, it's really an enormous amount of money. Even in normal times, it's something like 8% of the money supply that they steal that way. Now, that doesn't show up as 8% inflation because some of it gets absorbed by economic growth, by population growth. Foreigners, most dollars are actually held overseas, and foreigners have a lot of appetite for that. If Mexico gets richer, then rich Mexicans want to hold dollars. They don't want to hold pesos because pesos are risky. That then absorbs a bunch of that money, right? So we don't necessarily see 8% inflation a given year, but they are stealing 8%. They are printing an additional roughly 8% of money and pouring it out there, diluting all of the existing dollar holders. So it's really an enormous amount that they're taking from us. And, of course, when you go through, sort of the mainstream explanations for all this, for inflation, for example, they will obediently toe the party line, right? They will blame anything they can find. It was Mr. Putin. It was the supply chains. It was the boat stuck in the Suez Canal. Anything they can find, they will try to explain it away. When, I mean, we've known for centuries, really millennia, that there is only one way that you get generalized inflation, meaning inflation across everything, that is printing the money. So the obvious solution to it is reduce the money supply, right? So like the Fed would, sell off all these assets that it had bought with that printed money, and then it would retire the dollars that it got in return. Or alternatively, the Fed would put reserve requirements back on fractional reserve banks, and those banks would have to get back towards solvency. So that would be the sort of grown-up way to reverse the inflation that they've caused. But of course, central banks don't want to do that. The whole point of a central bank is so that you can inflate. So instead, what they'd rather do is choke the private economy. So they do that with rate hikes. The problem is that not only does that crash the economy, it causes unemployment, it causes GDP to go down, but empirically, it has not been doing the job. I think to a shocking degree, it has not brought inflation down, and I think the reason is that they printed way too much too fast. they had gotten sort of punch drunk with 2008. In the 2008 crisis, really banks around the world, but specifically the Fed, printed trillions of dollars and handed it out to these banks. And at the time, a lot of people were warning you can see inflation from that, but you didn't. And the reason is because those banks held on to the money. They held on to the money because the money was printed as a bailout. In other words, they had giant holes in their balance sheet. They came to the Fed and said, hey, listen, I'm going to need a favor, my friend. I'm going to need a couple trillion. The Fed said, hey, no problem. Good. They plugged it in their balance sheet. It didn't go out and circulate, not the entire amount. The problem is that, so that kind of gave them confidence that, hey, wait, maybe this time is different. Maybe we can print a bunch of money and we won't get inflation. And they carried that into the COVID disaster, where governments wanted to impose these lockdowns, but of course the problem is that it would be massively unpopular. So they came to the central banks, they said, listen, I'm going to need you to finance this, basically float my lockdown, okay, like tranquilize enough of the population that 51% of them are going to be cool. And you remember in the US, you had millions of people who were being paid more to sit on the couch than they were at their previous job. So, when we look out and we say, what the heck happened to my country that all these people are willing to accept totalitarian lockdowns? Well, yeah, you got to sit on the couch. Sure, the churches were closed, but you were being paid to sit on the couch, my man. It's a good life. So anyway, they financed these lockdowns. The problem is that was too much money. And unlike 2008, they didn't print it and stuff it in the banks. They print it and they handed it out in stimulus checks. Well, yes, that money circulated, right? It was not locked away. It was not buried in Uncle Scrooge's vault, to paper over the bank's losses. No, that was out there in the wild. So that launched inflation. I don't think, early on when the inflation took off, you had central bankers all over the world saying, no, this is going to be transitory. It'd be over in a couple months. I think they honestly believed that. Like, I think they smoke their own product, and they actually think that inflation is caused by Mr. Putin and greedy workers, that they've lost sight of the fact that inflation, what Milton Friedman told us, that inflation is always and everywhere a monetary phenomenon. So I think that they themselves were surprised that the inflation lasted. They reached for the standard tool, which is strangle the private sector with rate hikes. That didn't work because the trillions involved were massive. I mean, just in the US, they printed about 6 trillion. At one point in 2021, about 1 in 3 US dollars had fresh ink on it, just been printed. It was really quite an exceptional amount. That was about twice the pace of money printing in the 1970s. And of course, the 1970s had double-digit inflation. So you'd think they should have known better. I think they were sort of high on that 2008 experience. They thought maybe they could defy gravity again, but they didn't. And so at this point, our problem is that inflation, yes, it's been coming down for most of the past year, and that's because they stopped the extreme rate of money printing. But at this point, it's actually starting to rise again. So for the past, I think it's 5 months in the US, inflation has either leveled off or started rising. Past 2 months, it's literally been going back up. And this is starting to look like the 1970s pattern. So what happened in the 1970s is they were printing too much money. It was the guns and the butter. So they wanted to, build up welfare programs. And at the same time, they wanted to do the Vietnam War. So that was this enormous amount of spending that then sent inflation up. And they had one peak, and then they kind of pulled back and didn't print so much, and so it came down a little bit, and they declared victory, mission accomplished. Paul Krugman wasn't active back then, but he would have been on Twitter bragging about it. So it came down a little bit, and then it started taking off again. And the second hump was actually much worse than the first. And it lasted for years and years. And the concern there, I think, is that we're following the exact same pattern. I think because the Fed and the other central banks have been unwilling to force governments to rein in their spending, they've only been choking the economy. I think it hasn't been enough. We're looking at another jump in inflation. And if we go back to the 1970s, I think what's most concerning about it is that the inflation in the 70s only ended because Paul Volcker had, he ramped rates up, well beyond double digits. I think at one point they were close to 18%. It was by 18 or 19% on the mortgage. So he really ramped rates up, and that's what finally ended inflation. But there's two problems there. One of them is that we got a double dip recession. It was a massive recession. This is right at the tail end of the 70s coming into Ronald Reagan. And the other problem was that Volcker was appointed by Jimmy Carter. Amazingly, Jimmy Carter was bad at almost everything, but apparently he appointed the hardest money Fed president in 50 years, so go figure. But Volcker was appointed by Carter, and because of those recessions, because Volcker actually did kill inflation, Jimmy Carter lost his job. The recession was so bad that people pinned it on Carter, and even if Carter tried to come out and said, yeah, but this is all for the good of the country, it didn't work. So now, unfortunately, Washington has eyes, and they saw what happened, right? So now the warning goes out that any president who's thinking about taking one for the team, right, who's thinking about appointing a hard money Fed president who actually ends the inflation at the cost of recessions, the writing is on the wall. Don't do it. Leave it for the next guy. So I think that people sort of expect that at some point we're going to have a Volcker, we're going to have this miracle man step in and jack rates up to the moon. But I think Washington has learned its lesson, and they'd be fools to let that happen again. Meaning that the inflation, if we get that double dip, that 1970 style inflation, that sucker could keep going for years and years.
Excellent points there. Let's begin with the point about how they're starting to believe their own lies. It seems that, we all know, I guess you and I know, and I think most people, that inflation is a monetary phenomenon. They significantly increase that money supply, which is what causes inflation. And now the government spending, which is to no end, and we're going to go into the debt crisis that we have. It's like a time bomb. They're spending, I think it's like 1/5 of GDP and the economic growth from last quarter. The deficit now, I think, is 6.3% of the GDP. Insane numbers. And like you said about how they're crowding out the private sector, they're spending all this money, and they're actually, if you take out their government spending from GDP, it seems that the private sector is already in a recession in many pockets. And and these are supposedly highly respected, very intelligent people. It seems to me, like even Janet Yellen recently, I think this past week, said bond yields are surging due to a strong economy. When I heard that statement, I didn't. Is she delusional? Are they just believing their own lies? So with all of that, what do you make of it? And do you think we're going to have some type of resolution like a Volcker? Do you think Powell is capable of that?
Yeah, I think there was a lot of hope early on that Powell was going to be a Volcker. He started talking tough. He cited Volcker a lot and seemed to be telegraphing. Unfortunately, I think that was part of, the Fed kind of sees a big part of its job as a psychological op, to trick people into thinking that inflation is going to be lower than it is. And I've talked about this in some videos, but basically they think that inflationary expectations are kind of like Keynesian animal spirits. Like there are these dangerous spirits that live out there in the wild, and you have to slay them. That's what's going through their mind. But in reality, what it ends up as is the Fed lies. It sees itself as lying. It's lying. It's called forward guidance. And so I think that, Powell was talking big about Volcker in hopes that his big talk would talk down inflation expectations. But unfortunately, I don't think that's been the case. He's hiked rates not that much more aggressively than in any other country during the same period. So, Europe and so on. But moreover, he has failed to, I think, address the actual cause of the inflation, which is federal spending. So federal spending is what's driving all of these trillions out into the economy. The rest of it is subsidiary to that. So the fractional reserve is, compared to how much they normally print, they're pretty much doing the same. The big difference has been that federal spending. And just a couple of weeks ago, maybe about 2 weeks ago, Powell finally, very, very softly, he said something like, the fiscal path we're on is unsustainable, and that should change sooner than later. All right, that's the closest he's ever come to even daring to suggest that the emperor should not take so much in terms of federal spending. And I remember about 6 months ago, there's actually at one of his, the Fed meeting interviews with reporters, there was one reporter who asked him, is federal spending part of the reason for the inflation? And I remember at the time, like he looked like he would have insulted his wife. Like he was like insulting, he was like, oh, no, look, we just take these things as they come. And, he said, federal spending matters. Sure. It's one of a million things that we put into our models. All right. Now, there is no way that he's dumb enough to think, the federal government spends what, 25, 30% of GDP. There's no way he thinks that's one of a million things, going alongside airplane mile redemption schedules or something. I mean, he knows darn well that's a big deal. He knows darn well that he was never going to pull Volcker, right? His entire job is to sugarcoat stuff to dull the impact on the markets. I'm sure that Janet Yellen sees that as well. She contradicts herself constantly. Every time a bank goes under, both of these people wake up in the morning and are suddenly seized with the need to tell the world just how amazingly strong American banks are. I mean, it is pure lies because they see their job as lying. And it raises sort of a deeper question that, I'm sure they know they're lying, and I'm sure that they believe they're doing the right thing by lying, right? They think that they're protecting the economy and they're saving us all from ourselves in the act of lying. And, I think that goes to sort of a deeper problem, which I think is the difference in vision between how sort of statists or how socialists or progressives, how they view the role of government and how we sort of outsiders view that. And I think that for progressives or for, people who kind of believe in the primacy of the government, I think their worldview is that the world is basically a giant classroom that is inhabited by psychopathic children who are trying to murder each other. And then you've got this teacher who sort of, imposes order on them all, right? She's the wise Lord who, teaches them wisdom and patience and keeps them from killing each other. And of course, I think the rest of us, to those of us on the outside, government is actually the savage predator that, has to be kept on a leash because it will come in and take your babies. So it's a very different view of the world. But at any rate, in people like Powell or Yellen, in their mind, it is their job to be the school teacher, to lie to the children, to tell them comfortable truths so that they, shut up and sit down and take the nap or whatever. And, of course, the problem is that when you are lying for a good cause in one's mind, it's very tempting to keep going with that, right? And to keep lying all the way through. And, indeed, we saw that in 2008, where it was all, everything's fine, don't worry about it, everything's fine. And then all of a sudden, everything collapses and they all say, it's a perfect story. It's a 1 in 10,000 year occurrence again. And, people are saying, how could you have not seen this coming? And the answer is they lied. They lie for a living. So to answer the original question, does Powell have it in him? I don't think he does. Up until now, he has been pretty much bog standard for a Fed chair. He has not addressed the problem, which is government spending. He's shown no willingness to even go there. So I think that they are going to muddle through. Our economy is headed towards a combination now of inflation going back up together with the economic stagnation that's partly coming from those high rate hikes. You put that together, and I think that where Powell go, where the Fed and Powell go from here is basically trading off. So they're going to pull back a little bit on the fight against inflation because they're afraid that unemployment and economic growth is going to suffer too much. They're basically going to sit there and trade off as if they are the God emperors. They're going to trade off just how many jobs are worth just how much inflation. And, I think if you sort of zoom out on this, really, this is quite outrageous. The Fed is not elected. It is not even a fully government agency. The Constitution does not give the government as an entity the power to make those kinds of decisions, but it certainly doesn't give them to the Fed. But unfortunately, that is the world we live in. I think that we are going to be the playthings of the Fed going forward. the Fed's basically going to try to muddle through with its own custom blend of stagnation and inflation.
Absolutely. Very scary proposition there, but it is the truth. And, power corrupts, absolute power corrupts absolutely. And it seems that's exactly what's occurring with the Fed. They have way too much power, centralized authority. And you and I are both fans of Bitcoin. Decentralization is so important. And we're going to get into Bitcoin. But, what is the trajectory? This debt, okay, 33.7 trillion and rising, estimated to have, they already did another trillion, I think July to September next year. They're projecting another 1.4 trillion or in the first 6 months. And so interest expense up 1 trillion, debt is exploding. So when you talk about the 70s, what I start thinking is a replay of 70s plus massive debt that we've never had before, that this is, and the spending does not stop. So it seems to me there's no plans to repay this debt. So is QE inevitable and monetary debasement will just keep continuing? What do you think?
Yeah, I think you're absolutely right. And that is the big concern is, if we compare today to the 1970s, there was a lot less debt in the 1970s. We had just come off gold. So, the banking system hadn't had that long to rot yet. So, at an absolute minimum, I think what we're looking for here is a 1970s combined with a 2008 financial crisis. And you're right, there is absolutely no plan to get off this trajectory. If anything, both parties are united in spending even more. It's like they're good cop, bad cop, depending on what the, is it a war? Is it global warming, whatever it is? They're really allies at this point, partners against the people, increasing the spending. And the funny thing, I think, is if you look at how voters behave, voters don't seem to think it's real either. Okay, like we had this student loan handout from Biden over the past year, and that was, I think it was about 600 billion as a first installment, and the total amount was going to be maybe over $1 trillion. And voters didn't seem to care. Like that was literally their money. Okay, one of the biggest assets of the federal government is the student loan debt. It's subsidized. It was already sweetheart loans to begin with. But anyway, that was 600 billion that belonged to the people. And he gave it away to, a bunch of relatively rich people. College graduates are richer than average. So he gave it away to rich people, and everybody was like, yeah, what are you going to do? And it's just striking. Like voters don't seem to think the debt is real. They don't seem to think that federal assets are real. They seem to think that none of it is real whatsoever. So I think that there is no natural enemy to reining it in. There was a time, back in the early 80s, for example, there were a lot of people who believed in hard money, and a politician could actually get up and say, I'm going to reduce the budget deficit, and he would actually get applause for that. I think those days are essentially gone. Both parties are united in saying that we're just going to spend as much as possible. And if that's the case, then I think you've only got two ways out of it, right? One of them is that you let inflation run so that debt eventually shrinks down because the inflation erodes it away. The other outcome is what Greece did in 2009, where the government just wakes up one morning and says, hey, you know what? I don't think I'm going to pay it after all. And, people talk about default as if it's a complete impossibility. But there does come a point where, if you're running for president, you can get up in front of the American people and say, hey, listen, you want to make a quick 33 trillion, I got a solution, right? You talk about, huge amounts of the debt are owned by Chinese or they're owned by Wall Street bankers. These are very low sympathy constituencies among the American voters, with good reason. So, if you're a politician who gets up and says, yeah, listen, I'm going to repudiate the debt. I'm going to take care of the widows and orphans. So I'm going to issue brand new debt to cover like Social Security or pensions. So grandma's, treasuries don't get wiped out. So I don't know, maybe a third of it. Okay, so we're going to wipe out 33. We're going to issue 10 brand new. You guys are going to make a net 23 trillion. At some point, that is actually attractive. And countries do that all the time. Greece in 2009, when it was going to walk on its debt, they were actually paying less in debt service payments than the US was paying at that time. Okay, so substantially less than the US is paying today. So it is always a temptation for voters. And I think, it's 50-50 whether that 33 trillion is eventually going to get inflated away, like aggressively, or is it going to get defaulted on? But I think the odds that it actually gets repaid in an orderly fashion is close to zero.
Well said. Now you mentioned Greece. Let's talk about other countries. And I know you have spoken a lot about China. So what is China doing right now? While the US is distracted with all these issues, China is buying up resources. And we're hearing about how they refilled their crude stockpiles back in August. So tell us what's going on over there in Asia. And please go into Japan as well. You were just there, so tell us more about Japan as well.
Yeah, so China's funny. In one sense, its economy is run similarly to how ours is, in the sense that they use the central bank as a piggy bank, and then they essentially make politicized investments. So that's why China's in trouble right now. It's channeled a lot of money towards politically favored industries, so green, also certain manufacturers where the sort of Chinese industrial planners had identified those as industries of the future. So things like batteries, again, a lot of green stuff, AI, certain technologies, semiconductors. So anyway, they had channeled a lot of money into specific sort of crony industries, and that's not blowing up in their face. They are going through a rough patch at the moment, which is probably going to last. I don't think it's going to last that long, possibly a couple of years, but I don't think decades. Like, I think there are a lot of people who are sort of dancing on the grave and sort of enjoying China's collapse. I don't think it's going to last. And the reason is because as you mentioned earlier, the kinds of things that China is doing are much more responsible than our own leaders. Basically, they've got a lot more adults in charge. In the West, both the US, Europe, and even in Japan, actually, the people running the place have, I think, really become irresponsible. There was a time when they had some pride when, they would do things like refill the strategic petroleum reserve because it was for the good of the country. Unfortunately, I think that a lot of those people are gone. They've been replaced by hacks who are essentially doing things only if they benefit, their particular party. So I think that China is really doing a lot of smart things that we ought to be doing. You mentioned they're buying hard assets. China's doing this all over the world. They're, putting their reserves into things like gold, also into simply raw materials. So they've got reserves of essentially all critical inputs. Their foreign policy is conducted more to assure access to raw materials so that it can be a subsidy to Chinese industry. So, for example, they'll go into Africa and they'll give development aid, or they'll build a hydro plant or something, a railroad, and in return they want access to oil or minerals, cobalt, things like that. Now, if you contrast that with what the US does when we go into these countries, I mean, it's embarrassing. They'll show up and, US officials want to know about unions or environmental stuff or LGBT policy. And essentially, as long as these countries parrot the, whatever politically correct line on all of these things, then they'll get the money. And the US makes no effort to secure access to these minerals, to get any kind of supply chain going. Of course, the US and Europe are both chasing away domestic production, so both in oil and in some of these other minerals. So in many ways, China, I think, is, yes, they're going through a rough patch at the moment, but I think if we're zooming out decades in the future, I mean, China's just running circles around us in terms of, building a foundation for their economy. And if we look at sort of the risks involved here, so the West in general is chasing out production largely for environmental reasons. But the thing is, those environmentalists, they have a lot of influence in the US or Europe, but nobody in like Belarus or North Korea cares about these environmentalists, right? So we are unintentionally shaping a world where all of the raw materials, the energy resources, the cobalt, the rare earths, all of these critical inputs, these are progressively being manufactured in countries that by definition don't like us. Like, for some reason, these countries really don't care about Western activists, and that's typically because they have some sort of hostile relationship with the US. So, I mean, it's really suicidal. We saw it in living color when Russia invaded Ukraine, where Europe had spent decades handing over sort of this human shield in the form of closing down its own energy for virtue signaling so that it could switch over to Russian oil. And then it turned out when there was a problem there, lo and behold, they were captive. So I think really the entire West is doing this. Joe Biden is doing it as fast as he can to hand over all this sort of economic leverage to countries that don't like us. And China is not run by dummies. I mean, they understand this completely. They see exactly what's happening. They're trying to help it along. They're trying to monopolize providers from third countries like Indonesia or African countries because they want control over these materials, because they know that at some point that can give them control over the United States. And they regard the US as somewhere between a loose cannon and a competitor. So they would very much like to keep the US out of the way so that they can do whatever it is they want to do in Asia. So I think that's China. I think the story in Japan, to me, is kind of fascinating. They have essentially run the recession playbook. Okay, so the modern recession playbook is that when your economy is not doing well, you ramp up government spending and you lower your interest rates. Okay, and both of these are actually bad for the economy, but they have become the mantra ever since the Great Depression. And what I think is interesting in Japan is that Japan put that recession playbook in when their economy broke in 89 or 9, I guess it was 1991-ish. So when they came off the bubble economy, they put that playbook into place, and they really institutionalized it now for like 32 years. They've been just running it nonstop. So spending ungodly amounts of money, holding interest rates near zero the entire time. And the reason you don't do that is that it gives you a zombie economy. Okay, it gives you a really slow recovery. Japan has managed to stretch that out into 32 years at this point. And I think it's starting to catch up with them now, where they've been running into crisis. The yen has just collapsed. It's at 150 to a dollar, which it hasn't been there since the bubble economy years. The central bank is just popping up several times a week at this point to intervene in markets because they're afraid of it getting out of control. So I think, Japan, after 30 years of a zombie economy, they built up 267% of GDP in debt. That in US terms, that would be roughly 60 trillion, because there was this giant mountain of debt that kind of backed into a corner where the central bank really doesn't have much policy maneuver, because if it bumps up rates too much, then that would actually increase debt service payments in Japan to the point where, I mean, they could be larger than the existing government budget. They could be tremendous. So Japan is really backed into a corner. I think a lot of people are curious if at this point Japan is going to kind of be the spark for the next crisis, which, kind of a 2008 style crisis, probably this time focused on sovereign debt, which is really hitting the entire world, but Japan's sort of on the cutting edge of that.
Great, thank you so much for that. Bank of Japan being the largest foreign holder of US debt, we always talk about it often. It's very important for the US, for people here to understand what's going on there. And, recently I had a discussion with someone regarding the potential catalyst for long-term rates rising.
Yep.
And it could be due to the Bank of Japan selling the US treasuries while they repatriate their own. So that's another thing to watch. Globally, governments around the world are selling treasuries, and the government our own government is selling treasuries. So it's, but yet they're spending to no end. So, and that's the part that it's unsustainable, this debt that we have. They spend when the economy is booming because it's like, oh, it's time to borrow, right? Then they spend, and that's why I'm concerned about the upcoming recession, is they're going to say, oh, we have to save the economy, so let's spend some more. So it seems that this spending is inevitable until they cannot anymore. Now, US dollar, global reserve currency, there's no contender, nothing with liquidity and stability. So that's the saving grace for the US is the dollar. Everyone wants the dollar. Who wants, the peso or all these other currencies? And Peter, I want to ask you, with all the foregoing that we discussed, where are we on this timeline for recovery? Now, you mentioned in one of your great write-ups, 1921, they accelerated the recession. The government accelerated it, which was better. So we were able to have the roaring 20s. So now, on the other hand, because of all this spending and debt, it's like they're slowing it down, trying to avoid it or something.
Right.
So, and you also mentioned another great thing. I love all your writings. They're excellent. I love it. They're entertaining as well. You're so funny and brilliant. You talk about the Roman Empire collapse, and you compare the United States to that as well. So we're in the late stage of this economic cycle. But how much longer? Do you think a decade of recovery? What do you think of that? Where are we on this continuum?
That is always the question. So we know how the book ends because the fiat book has ended many, many, many times in the past. But we don't know how each chapter ends. And, the tricky thing is the government is generally screwing things up, but the counterweight to that is that people are trying to fix things, right? So, when you or I talk about policy, we're generally talking about governments who are almost always screwing things up. And so somebody might think, okay, well, then everything's going to collapse tomorrow. But the thing to keep in mind is that underneath the government, underneath that sort of scum on the surface, you've got 300 million beautiful Americans who are working to make their lives better, right? They're building their business, they're building their skills, they're, finding a better job, they're building up their family, so it's not just whether the government does, bad things. Is the government so bad, or its policies so stupid that it can overwhelm the efforts of those 300 million people? And that's always the question. So, if we go back through various periods, the Great Depression was really, the granddaddy of it in the past century anyway. And there you really had a 1-2 punch by the uniparty. So Hoover and FDR were on precisely the same page economically. They were both socialists. And they put in place a series of policies that they were just punch after punch after punch. And they did overwhelm the people, and they crushed it. They crushed the economy. In the 1970s, they came close again until Volcker came in. If they'd kept it up, then, I think it's quite likely we would have had at least a lost decade there, possibly longer. So, a lot of it is going to depend, like whether we're talking 2 years for the collapse or 20 years for the collapse. A lot of that's going to depend on the government, how, not only does it do stupid things, but does it keep renewing? Does it keep coming in for another punch to the economy while it's lying on the ground? And that's going to depend a lot on the personalities. We're also going to find out how many lessons they've learned. So the 1970s, for example, showed that price controls don't work. Price controls are one of the biggest ways that you can crush an economy. And they're always tempting for politicians. They come in, they complain about price gouging or about, greedy unions. Take your pick, depending which side you want to blame. But that always gets a public hearing. And that's very dangerous. We saw that with the gas lines in the 1970s, right? People were pushing their cars to the gas station and then lining up for hours and hours. I actually remember I grew up around the corner from a gas station, and we had people parked out front all day long back in the 70s. So if they've learned their lesson on those, then hopefully we won't see that again. The biggest really thing the biggest policy mistake in the 1930s was also price controls. It was specifically price controls of wages. So Hoover and FDR went after anybody who cut wages. Problem is that you had deflation. If you have deflation, then everybody's getting an automatic raise, right? Because a dollar is buying more. And so in that context, they were essentially forcing companies to keep prices up, or to keep wages up. That's probably the single biggest mistake of the 1930s. That kind of thing is no longer in the public conscience. it could come back anytime. So never say never for stupidity from policymakers. But, I think broadly speaking, for me anyway, that's really what I look for, is that there's a set of policies that would really send us way over the edge into a Great Depression. And I haven't seen those coming along yet. I think what's a much more likely scenario is that 1970s plus 2008 scenario. So in other words, bank crashes paired with stagflation. There, I think that's really my biggest concern, just because we're not guaranteed another Volcker. And if we don't have another Volcker, then I think that sort of thing can go on quite a long time. In a sense, that's what Japan's been going through. But I think that I imagine that it would be worse here. Japan has some built-in advantages that I think it hasn't been as painful for them as it would be in the US and Europe.
Thank you so much for that. So I guess I want to go a little further down that rabbit hole, and let's do more of a shorter term timeline. What do you think really breaks first? What do you think? We didn't talk about housing, but we all know that the only saving grace over there is that there's low supply, because the Fed locked everyone into their homes with these low rates. So we have low demand and low supply. So that's good so far. But once we get unemployment ticking up, which occurred, people don't realize this, unemployment goes up in the recession. And sometimes we even get jobless recoveries. And so it happens after the recession. So unemployment is not, it tends to be later on, it's lagging.
Yes.
So, So at that point, you can get a flooding in the housing market, because once someone doesn't have a job, they can't pay their mortgage payment. So we got those potential headwinds. Now we know the banking crisis is not over. We know there's liquidity duration risk, and their banking crisis is a symptom of ZIRP, zero interest rate policy, as well as easy money, just like all the malinvestments that occurred because of the distortion in risk perception. So what do you think is going to be the straw that breaks the camel's back?
Yeah, it's tricky. If I had to guess, it would be related to probably sovereign debt. I think that's probably the most unique aspect of where we are right now. But I think there's kind of a cautionary tale. When 2008 hit, you remember in the first weeks, there were all these explainers in like the Wall Street Journal and Barron's. Okay, Barron's is for sophisticated investors, right? This is not like People magazine, right? There were all these explainers like, what is a CDO and what is an MBS, right? Mortgage-backed security, collateralized debt obligation. They were explaining all these things because nobody on Wall Street knew what any of this stuff was, right? Barron's aims at Wall Street, and they were like, today's explainer is, what is a colonial? All right, and these were the things that just crashed the entire economy. Right. If you ever watch the movie The Big Short, they've got a scene in there where, Burry's going around trying to shop his what was it? I'm trying to think the instrument. Anyway, he was trying to shop to the banks, and the bankers were sitting around like, how much do we charge this guy? A dime, a quarter? I don't know. How much? Okay. Moral of the story being that the stuff that crashed us in 2008, these were not markets that were well known. Right. These were things that required explainers and barons, and required, Wall Street sales guys to throw darts to figure out prices. All right. These were really, really obscure things. And I think next time around, there's going to be something similarly obscure. It's not going to be the stuff that everybody's watching. Right. And I think the problem is that once you've got enough debt in the economy, once the Fed and Treasury have contorted themselves so many times to try to hide all this garbage, try to pretend it's not there, try to stick on the BTFPs and whatever these other, Fed and Treasury programs are to kind of try to bubblegum and duct tape it all. Once you've got this monster in there, there are so many, gremlins in that machine, and nobody knows what the heck they are. So I think, if I had to guess, like the most likely culprit, then I would say, sovereign debt. But having said, I think like the 80% outcome is that it's something that none of us have ever heard of. It's probably something that you or I are going to need an explainer for, because we're like, what the heck is this thing? So I think that's the biggest concern, is just it is held together by duct tape, and almost nobody understands what it is. There was Jon Stewart, who he used to be great. I used to love the guy. I used to watch him every night. He's a comedian back in the day. And during the 2008 crisis, he had a great segment where he said, he was saying, why is it that every week they come out and tell us about this once in a century crisis but somehow these things keep happening over and over. And he said, I'm starting to think this isn't a perfect storm. This is a regular storm, and we have a crappy boat. Stewart said it with more curse words, but we're on YouTube, so we'll keep that clean. But the moral of the story is that we definitely have a crappy boat. I don't even want to imagine how much crap is in there. And this is going to be stuff that has $1 trillion attached to it. It could be derivatives. There are an enormous number of things that could go wrong in a financial system that is as over leveraged and as fundamentally insolvent as our current one is.
Said, I agree with you. I think it'd be too simple to say it's a housing crisis or this or that. Yep. I think it's probably going to be a mixture of all these things. We have margins compressed, top number coming down, bankruptcies are up, I think, over 30%. It's just crazy, right? I just saw that headline. So let's end on a positive note. Solutions.
Yes, there you go.
And you know what? Yes. Bitcoin, you and I both share a passion for Bitcoin, the hardest money ever created, incorruptible, immutable. Let's talk Bitcoin, freedom, truth. So Peter, share with us what Bitcoin means to you and how it could be potentially a solution for all.
Yeah, I think Bitcoin is obviously a lifeboat for anybody who gets on board, right? It takes you out of that fiat system. You're no longer being sheared like a sheep by the central bankers. And then on a sort of wider zoom, I think the more people who get into Bitcoin, where everybody gets into Bitcoin, sort of drains the swamp, right? You drain another piece of power out of the state and the central bank working together. It is a frustratingly slow process. I think it's going to accelerate here because we've gotten some very nice number go up recently. So I think that there's going to be a lot of people kicking the tires on Bitcoin. But whether it's Bitcoin or gold, I think anybody who pulls out of the fiat system robs it of its power. It does accelerate the crisis from their perspective, but it also makes it smaller. So I would much rather have a crisis soon and small than put one off, 7 or 10 years. That's going to be a lot bigger and take everybody else down. And, I think one of the big dynamics in Bitcoin, in a sense, we had something similar in the 1970s with gold. Now, gold, I think, while Bitcoin is based on gold, I think that gold has a weakness or a vulnerability relative to Bitcoin, which is that, gold is an amazing money. I far prefer gold to fiat. But if you talk to a fiat bro about gold, then they might reasonably ask, like, if gold is so amazing, why does no country use gold as its money? There's 200 countries, none of them use gold. So what gives? And I think it's an easy answer, which is that gold is very easily seized, right? If you are hoping to have a currency that is gold backed, you can't tell people I have the gold, but I can't tell you where it is, right? You've actually got to show them the gold, right? And that means that, it's got to have a wall around it with, armed sharks and whatnot. And so government is going to have a very easy time finding that gold. They're going to come sit down with you and they're going to talk about what they'd like you to do with the gold. So that, that happened with FDR, obviously. That's always on the table. And so that, Bitcoin fixes what I think is gold's fundamental flaw, meaning that if, every time fiat collapses, people eventually return to hard money. Historically, they've tended to return to gold or silver. I think if we have enough people who are familiar with Bitcoin when the collapse comes this time, then I'm hoping that people will go to Bitcoin and then we can finally end the cycle. So rather than collapsing into gold, they seize the gold, collapse into gold, they seize the gold. Instead, like, we can finally break that cycle for once and get out of it. Now, that I think has a lot to do with when this, fiat collapse is coming, right? If it's coming 20, 30 years down the line, then I think by then enough people are going to be into Bitcoin. If you look at young, libertarians, almost none of them are into gold, right? The energy is Bitcoin. Young people have a lot easier time understanding Bitcoin. It's much more approachable. So if the collapse is coming in 20, 30 years, then I think we just go directly into Bitcoin, and then we finally end, hopefully at least that'll be the last monetary crisis. We still got to watch the wars because they never give up. On the other hand, if the collapse is coming in a couple of years, which I don't think it is, but if we're talking a 2-3 year timeline, then I think most likely we go to gold. And then at that point, sort of one by one, as the new generation comes in, they flip from gold to Bitcoin. That would be a much less acrimonious flip. I think that would almost be a friendly, parent to child, like, here you go, you are inheriting the future. So that I very much look forward to. But either way, I think that, the fundamental cause of our crisis these days is central banking, is the ability of governments to use inflation to seize an arbitrarily large portion of the wealth of the world. And I think hard money is going to be the only way out of that. Unfortunately, I think history says that to get from where we are now to hard money, it's either going to take an incredible personality, like the beliefs of Ron Paul paired with the spine of Donald Trump. I think it's possible that we're going to get that person. I don't think we necessarily count on it. In which case, the next most likely scenario is there's going to be some sort of a fiat collapse. Maybe not hyperinflation in the billion% sense, but in the 50% a year or something like that. That actually happens quite frequently. It's happening at the moment in a number of countries. And then on the other end of that, I think we come out to hard money. I think it's also worth noting that if we go back through American history, we have been through a lot worse, right? We've had multiple hyperinflations, literally the big billion% type hyperinflations in this country during the Continental era. Lincoln approached hyperinflation. We go back in the colonial era, we had them constantly because the states were just printing confetti like there was no tomorrow. We have been through a lot worse. If you take Lincoln, for example, in the wake of the Civil War, half the country was flattened, substantial portion of the population was dead, and the country was going through hyperinflation. I mean, it looked like we were doomed. And literally 15 years later, by 1879, we had a gold standard. We were ushering in the golden age. The socialists call it the Gilded Age. Mm-hmm. The golden age, really, of the entirety of humanity, right? If you take that period from like 1880 to 1910, everything cool was invented in that period. It's an astounding area of achievement. That was just 15 years after the Civil War, right? So I think it's easy for people to get discouraged. You pick up the newspaper and it looks like we're losing every single time. But we have been through a lot worse than this. The human spirit is powerful, and particularly is one of my favorite things about Americans. I mean, just we are a very impressive people. When times are easy, I know we're kicking back with the Netflix and the McDonald's and the whole thing. When times are hard, Americans have stepped up really impressively. So I'm not looking forward to the storm itself because there are going to be a lot of innocent victims. But in terms of what comes after the storm, I am very excited for that.
I agree. Well said. I love it. Bitcoin is hope. And there is hope. Absolutely. I believe that challenges bring forth opportunities to find solutions. Yes. And I believe in humanity. And I think we've been through very difficult times, and people don't realize that they have recency bias, and they don't see and take the big picture view like you do. And thank you for mentioning all that. And yeah, I do believe there's a lot of hope, and the near-term storm will be pretty bad, but we will rise like the phoenix from the ashes and have a whole new beginning and be even better than we were before, because I believe that we're resilient and we come back stronger, right?
Yes. Yep. Absolutely.
Thank you so much,
Tempered
Peter.
in fire. Yep.
Absolutely. Thank you so much. You're amazing. You're one of my favorite economists. And please tell our audience how they can follow you and watch you daily.
Yep, I've got daily videos over on Twitter at Prof Stonge, so ProfStonge. I've also got a newsletter up on Substack, so I kind of get more in depth on that, more history topics, and we've also got a podcast that comes out every week, which you can check out. It's on Spotify, it's on all the things as Peter St Onge, PhD.
Love it, and I love your recent article, The Coming Zombie Economy. I encourage everyone to read that one. That was a good one. So thank you so much, and thank you to the listeners.
Of course, Ro. Yeah, thank you. Thank you for having me on.